Well, I am so sorry to say that Larry did not make it back in time for the show. He said his airplane came in late, and so he was late, and he wouldn't make it in time. So darn. But okay, we'll somehow we'll manage along without him. And just sad that he's not here with me. Anyway, Elon says he is working on Tesla Master Plan 4, and it will be epic. Okay, I'm guessing that his decision to work on Master Plan 4 probably came as a result of the enthusiasm that greeted his announcements with regard to the robot future, with regard to Optimus and robocabs. So yeah, would you think maybe that Master Plan 4 will have a lot to do with that? I'm also expecting that it will put another layer of knowledge or understanding on this whole electrical problem, this entire issue of getting enough electric to power all of the AI that's going to take place. I think you will also go deeper in Master Plan 4 into what AI and AGI are going to mean for Tesla, but also in terms of the world. How is this going to be managed? I think that'll be in Master Plan 4. And then also probably something to do with the dojo opportunity. Maybe there'll be something under the cover, so to speak, something that will be a future surprise that he'll kind of give us a teaser on. Anyway, those are the main things I think he'll talk about. Maybe, I think also he'll update us a little bit on energy storage products, maybe with regard to even energy companies like Octopus. There was news today on Octopus expanding into Spain. Lots of opportunities there for his energy companies, the energy company aspects of what he's doing to become much, much larger. And then for Tesla to actually be in the energy production business, certainly in the energy distribution, but why wouldn't they get into the energy production business? Anyway, that's some of the stuff. Probably some updates on automobiles as well, but that would be my guess at where the emphasis will be. Sawyer Merritt responding, he says that Tesla Master Plan 1 and 2 were cars. Then Tesla Master Plan 3 was energy. Yeah, I guess energy was the main thrust of Master Plan Part 3. And then he thinks that Part 4 will be about robots, both kinds, the two-legged and the four-wheeled kinds. Other people also spoke to this, and the ones that I saw were also talking mostly about the robots, but I think there's going to be more than the robots. I think there'll be, again, things about AI, AGI that go beyond the robots. All right. Barron's has this. He said this about today's action on Tesla, which was very, very strong. Shares closed up 5.3, and the after hours was another 33 cents. Shares closed up 5.3 at 187.44 a share on Monday. The S&P 500 and NASDAQ finished up nicely, okay, at 0.8 and 1% respectively. There weren't any upgrades or downgrades to focus on with regard to Tesla. CEO Elon Musk hadn't said anything noteworthy either. Japanese electronics company TDK announced a breakthrough in batteries on Monday, but the news was relatively minor for Tesla considering its use in small consumer wearable devices and not automotives. So I like Barron's, but this is like so horribly shallow and terrible reporting. That leaves Musk's approved pay package as still the main reason behind Monday's move. Okay, I'm just going to give you very quickly here. I'm just going to give you 7 reasons why the stock went up today. And it could have been all of them or a little bit of each. Number 1, 2 days after any time that Elon speaks at one of these major events, the market finally gets it. Sometimes it takes 3 days. Sometimes it takes 4. This time it only take 2. In my opinion, part of it was the market finally got all the things that Elon was saying on Thursday. Number 2, Elon says that 1,000 or a few thousand Optimi will be in factories next year, and he'll begin sales to third parties, confirming that again. But he added the cost of goods on the robots will be 10,000, and that the cell could be 20,000, but that there will be rentals first, not sales. And then he said a fast ramp to 100 million units per year. Therefore, Optimus will be worth $25 trillion. So Optimus alone, as a part of Tesla, will be worth $25 trillion. Well, those are the kind of things that get people enthusiastic, don't you think? That would cause people, especially the folks like you and me that have been in it for a while and really, really are the hardcore, maybe to go looking in the couch or in the easy chair and see if there's a few quarters in there we can kind of throw into the market based on those opportunities in the future. Anyway, number 4, Tesla is leading in actual AI applications by a mile, and that was just made self-evident by the activities on Thursday, but it takes a couple of days for that to kind of get across to everybody. And there was a lot of people talking about that, not just the Tesla fan club. Number 5, the focus is shifting off of cars and onto embodied AI services. So the car business is not going to be great this year. I think we'll get a surprise in the second quarter with regard to margins. We'll get an even bigger surprise with regard to margins in the third quarter. And I think there will be a continually increasing nice year as we go along. But right now, and probably the second quarter, not going to be great for the numericals when it comes to unit volumes of vehicles. So, but that's what's been driving the stock down. If the shift goes away from automobiles and onto energy and energy companies that are going to be doing arbitrage, making money that way, and onto AI and onto robots, well, all of a sudden, then you've got a different reason to buy the stock. Number 6, good news on FSD starting to be real world testing in China. That could have all by itself could have been enough to raise the stock $10. I mean, if we get FSD approved for use in China, there's a massive amount of potential revenue there. Number 7, oh yeah, the folks gave Elon a huge early birthday present. You know, his birthday's on the 28th, right? They gave him a huge early birthday present by saying, you are worth us keeping our word. Yeah. So it's a great birthday present. It made Elon happy. It made him enthusiastic. You've seen a lot of enthusiastic stuff since then. Yeah, people read into that. People want to see the leadership being excited about the future. Well, what now then? What now? That's a bigger issue, right? What happens next? Well, I suppose it depends on whether and how much faith people have, investors have, in the new story, the new narrative. If there's a lot of faith in that new narrative, then we can soar to new highs over the course of the next 12 months. And I think there's a relatively good chance that's exactly what's going to happen. Now, if there's only a little faith and people are like, okay, yeah, probably, but I'll throw a few bucks at that. Maybe we get back to that $300 level again fairly soon. A bunch of all of that is going to have to do with what Elon actually unveils, what we actually see in terms of physical hardware, in terms of software, in terms of pricing, in terms of times expected for deliveries, in terms of actual starting deliveries. As we see more of that unveiled, well, we could be looking at $700 later this year, which has been my price point for a while. I'm not as certain of that number as I once was. In fact, now I think there's a good chance it could be $300 at the end of the year, or it could be $1,200 at the end of the year. I mean, seriously, if they unveil and start to roll out robo-cabs before the end of the year, 700? I don't think so. I think it'll be a lot higher. If they show us a lot more activity in terms of the robots before the end of the year, which they may not, because he said they've got to do this last piece of hardware improvement and then start really building some units in 2025. So, but that if it's a little faster or we get some really good additional videos, we could see things pick up even beyond that 700. If we don't get any of that by the end of the year, we might only be at 300. Anyway, time will tell. I suppose it sounds like a chicken way out, but I'm going to hold off any new predictions until 8/8. I think that'll be a consequential day. All right, the Model 3 long range now qualifies for the IRA $7,500 discount. So it is now under $30,000, under $30,000 for a Model 3 long range. The stock was up $9.43 for the day. I think it's very interesting that it happens on a day when interest rates went way up. Also, Tesla, which is not normal, it should normally go down on that kind of a day. Tesla was headed up even before the market started going up. The market was flat to down, and Tesla was already up 6-7 points early this morning. Well, and then it just kept going as the market kept going. It started going up. From the 𝐶𝐲, well, wait a minute. I think we have to say we have to do my intro first. I didn't write that down. We don't want to miss it, right? Could you just say it in your head? This is, and then first thing you want to do is, and then after you do that, there's this other important thing right now. I'm really pushing getting people to do what? Yeah. And then if you want to really be notified that there's another great Brian White video tomorrow, and that tomorrow night Nicholas Gibbs will be with us to help us celebrate whatever the good news is tomorrow. It's going to be kind of hard to beat today's good news. Anyway, then you want to do that. And then, of course, go down below in the description, because down there you can go over and put $3 or $5 or $10 a month into, you guys know, you got it right. I mean, I think you've probably got it memorized. All right. The 𝐶𝐲 letter says, just in, 88% of economists believe the U.S. economy is headed for a soft landing in the next 12 months. 88%. There's an old story. I took a lot of economics courses, and I took some even at UCLA's, what is the name of their business school? I forget now. I should know that. Oh my gosh. Anyway, it'll come to me. Anyway, while I was in law school, I went over and took some business courses in the grad school program. And, there's this old saw about economists that if you get 5 economists in a room and you ask them a question, you can get 7 different answers. Well, you now have 88% of economists agreeing that the U.S. economy is headed for a soft landing in the next 12 months. Only 1 economist out of 43 surveyed by Bloomberg expects a recession in the U.S. in the next 12 months. By comparison, 10% of polled economists expect a hard landing, but not an actual negative 2 quarters in a row. Now, this comes as the Fed has been projecting a soft landing since 2023. Meanwhile, 56% of Americans currently believe the economy is already in a recession. Can the Fed achieve a soft landing still? Well, okay, last year, about this time, earlier, January, February, March, April, all through last year, you had those 88% of economists saying that we were going to have a recession last year. And then there was this one weird YouTuber who kept saying there's not going to be a recession this year. Not a chance. There's nothing about what I'm looking at that tells me there's going to be a recession. And yes, inflation will come down. I thought it would come down, and I was wrong. I thought it would go all the way down through the floor and turn into actual deflation, but it didn't. And finally, it stopped, and we had all that spending in the 3rd and 4th quarter by the federal government, which I should have taken into consideration. But anyway, so that was last year, and these guys were completely wrong. And when you've got 88% of economists agreeing on anything, so I'm not going to change my thinking, but everybody thinks the stock market's going to continue to go up and never go down again, ever. And economists believe that there's not going to be a recession. The equity prices are getting out of control. They're just wrong. They're just too high. So there is a lot of actual stock market science that says if you've got this kind of a move already in 2024, that even though there might be a fallback, that by the end of the year, the stock market will be up higher than it is right now. That's science. I mean, that's real science, stock market science. So lots of mixed signals again. Well, if you want to just get more and more confused, this is from Barron's again. It can be hard to know what to make of the U.S. economy. Inflation remains steadily high. A number of recession indicators, like an inverted yield curve for 24 months, and a weak consumer confidence suggest that a recession is looming ahead. On the other hand, GDP growth and corporate profits remain solid. Well, not all corporate profits remain solid. Only the big solid, all those numbers 1 through 7. And, Tesla still has solid profits, quite frankly. One explanation, according to economic researcher Jim Paulson, is that different sectors of the U.S. economy that have traditionally marked in lockstep are no longer quite so interconnected. What's Larry been saying now for a year? You get such great people on this channel. Larry's been talking about this, and so has Kathy Wood, about this rolling recession. And so you don't have the connectivity that you once did. He says during much of the post-war era, the U.S. was an industrial economy. What about pre-post-war? Okay, it was an industrial economy which rose and fell in concert, he writes in a recent note. But today, U.S. economic diversity, much broader, old tried and true recession indicators simply cannot capture an economy increasingly driven by uncorrelated sections. Yeah, so we become a mercantile economy. This happened a long time ago. This happened probably by the 80s. We were already a mercantile economy. We'd already given away a lot of our manufacturing to Japan, Taiwan, South Korea, then China. So a lot of that manufacturing had well gone by the 70s and 80s. I was already talking at that point that we had become Britain. We were now a mercantile economy, lots of services, lots of international services, selling our capabilities around the world, not our products, but our capabilities, our licensing agreements on, people like Microsoft, et cetera. We're doing very well. Apple examples. All right. So this has been going on for a long time, but I would agree with him that to the extent that we can have the services sector doing really, really well, even as manufacturing not doing so well. Anyway, to drive his point home, he cites the Bloomberg U.S. Economic Surprise Index. We talked about this a couple of months ago, which measures how closely economic data points turn out to match analysts' forecasts. Paulson notes that there have recently been upside surprises in two of the economy's biggest sectors, personal and household, and the labor market. At the same time, results from a third, retail and wholesale, have been mostly as expected. There have been a spate of negative surprises in retail, the real estate and the industrial sectors. So there shouldn't be any surprise about real estate. Again, if you're watching this channel, there's no supply. And there's nobody building more supply. So there shouldn't be any surprise in the real estate sector with regard to that continuing recession. There's been a recession now for 24 months in trucking. Who's talking about that? It's a big industry. There's been a recession now for 2 years in manufacturing. It is 10% of the entire economy. And the housing, 20%, at least maybe 30% of the entire economy is housing. So now you're talking about 50% of the economy has been in recession, 50% of the driving pieces of the economy. So I don't know where the surprises are coming, except from the economists that are not paying enough attention. While that makes it hard to generalize about the U.S. economic situation, it's actually good news, he says. It suggests the U.S. economy has become more diversified, not unlike a well-balanced stock and bond portfolio. As long as there's strength in some part of the economy that can balance out the weakness in others, it increases the chances the economy will continue to grow, if more modestly, as inflation, hopefully, he doesn't say hopefully, as inflation ticks down. I'm not at all certain that inflation is going to continue to tick down. This is now, I'm sorry, I'm going to go on a little long on this particular show. I wish I had Larry here to help me on this. We are now past the boom bust. The first time I've said this. Nobody else is going to say it. Go ahead. Find somebody else who's talking about this. We are now past boom bust. This economy now is normalized. So we have to start looking at the inflation picture through brand new eyes, Kathy. This is where you and I don't agree, Kathy. Kathy, we have to start looking at the economy as normalized and what is happening with regard to the normal things that impact inflation in a normal circumstance. So right now we're seeing energy prices going back up again, all energy prices, oil, natural gas, gasoline, all headed higher. We're not seeing the commodities starting higher yet, so that'll be interesting to watch. Although gold and silver, copper, those have gone higher. Those are concerning, something to watch, but they're not going higher. You have to watch all those kind of things. You got to look at what's happening with retail. Tomorrow we'll get the retail numbers. If those retail numbers are actually up 0.2% tomorrow, that's a very bad sign about any chance of getting inflation under control. The Fed didn't go far enough. What did I tell you all last year? How many times did I say on this channel? 5.25% ain't enough. Now, it may have been too fast. I'm granting you that. I think that was a huge mistake. Kathy, so many people agree with that, but it wasn't high enough. It doesn't hurt enough. It didn't stop anybody from doing business. you have plenty of companies and everybody else all had plenty of time to adjust. Plenty of time to adjust. Yeah, where we're going to see the problem, is going to be in these office, but that's a whole different story. The office market just collapsed because people are working from home. Anyway, all I got to tell you is, if you're analyzing along with me, if you're trying to figure out what's going to happen next with regard to inflation, you've got to start thinking of it as a normal economy again. And what are the things that impact inflation and inflationary expectations? Not the tail end of the boom bust that we just went through. Does that make sense? Let me know in the comments below what you think of that idea. Let me know what you think in terms of what does that mean going forward. I think it means that we may be getting close to the bottom right now on inflation, and we may start to see it tick back up, not because of the reasons the Fed said. The Fed's like, oh yeah, well, we cut too early, that goes back up. No, because you didn't cut enough to begin with. You didn't finish the work. You didn't finish the job. All right. So all in all, I'm still 35% negative GDP in the third quarter, and maybe in the fourth quarter, whether they call it a recession or not. I'm saying there's a 35% chance. We got very high, probably a higher chance than that we go negative in the third quarter. Fourth quarter, maybe we get out of it. We might even see 3 quarters. It's really hard to call right now. We'll still see 0 or 1 rate decreases this year. I'm saying 0. I think that we will start to see inflation start ticking up again, and that will kill any chance, which I've been saying almost all year. I think starting in February, maybe early March, I started saying no, none, 0 cuts this year. I still expect a 5 to 10% pullback in equities soon, but I also believe that the Mag 7 will contribute and will make it so that the market is higher than it is right now by the end of the year. We'll see that 5 to 10% cutback. It might even be a 20% cutback, but we'll still be higher by the end of the year. And then no matter what, by mid-2025, we should start to get the benefits of improved productivity from all this AI stuff, along with the expected productivity that I was too early on. I still think it's coming. I really believe we'll see companies getting way more productive. And then maybe also the normal change of government. We'll probably have a change of government at this point. That's how it looks. No matter what side of the fence you're on, if you look at the polls, it's looking like a change in government. But if you get that change in government, that almost always bodes well for the economy for that next year. All of that should potentially give us a roaring 20s ahead. All right, let's see what the markets are doing after all of that stuff. I hope some of it made sense. If there was anything you didn't understand, please give me questions, and I'll try to answer those questions in future programs. So let's look. We, of course, know that the Dow was up 188, NASDAQ up 168, and then the S&P was up 41, Tesla up 943, and in the after hours, as I said, up 33 cents. All right, let's go. Oh, the Magnificent Seven. All right, the Magnificent Seven, all up. Most of them only up a little bit, little marginal amounts. Microsoft was up 580. That was pretty significant. NVIDIA was actually down, and Apple continued up, although took a big tail, knocked off at the very end pretty significantly. Everything was down at the very end of the market today, but Apple in particular got smacked a little bit at the end of the day. And then you've got the Cathie Woods kind of mixed today. Yeah, some up, some down. Some of those ones we saw that were way down earlier today are bouncing back a little bit in the after hours. So there you go. All right, let's take a look at those bonds. Yes, so you've got 0.8 of a drop, 0.8 of a basis point drop now. We're still sitting though at 427 on the 10-year, so way up this more during the regular day. 2-year is also down almost exactly the same amount, 0.7 of 1 basis point, and the 2-month is actually up 0.9 of 1 basis point. So that continues to just spread and spread and spread. 110 basis points, if I'm reading that right. 2-year spread 427 and 47. 5, almost 50, again, almost 50 basis points, very close to 50 basis points. So that inversion continues to spread out. Let's look at the oil business. Was up a lot today. with Texas Intermediate going over 80 to 80.39. That's where it's sitting right now. Brent at 84.38. 13 cents up in the pre-market. Natural gas up 0.29 at almost $2.80, heading back towards 3. You got gold up 7.10 in the pre-market at 23.36. But again, I think that was down from earlier. The silver up 0.71 in the pre-market. Copper up 0.29 at 4.46. You've got the dollar slipping. Okay, so some of these commodity prices that we just talked about going up could be because the dollar is down just a bit. So part of that is you got to take that into consideration. Then you've got the Bitcoin down $86 at 66,430, pretty close to where it's been. And here's where the equities are in the pre-market. The Dow up 54, that's 0.14%. S&P up 3.50 or 0.06%. And the NASDAQ actually down a bit, taking some profits there at down 550 or 0.03%. All right, so there's where we are as we conclude today. Remember, earlier today, great video with Brian White, where we talked about what happened in Muskegon. And there was news that was made in Muskegon. If you want to see what that news was, there's the card to go back and see the Brian White video. And then tomorrow, of course, Brian White again. What were we talking about? It was more about Muskegon. I just don't remember, but that'll be tomorrow around the noon hour, unless there's breaking news. And then we'll have Nicholas Gibbs helping me tomorrow night. So hit the like, subscribe, notify button, join Patreon, and buy yourself some Cybertrucks with your own imprint on them. That's cool, huh? Make your own design. Create something fun, something to give away. All right, that's all I got. It's been great talking to you.